Hi traders and welcome to the Technical Analysis Market Watch on Friday the 18th of August. So I've seen some very big moves in the market this week and some key resistance and support zones have been broken. So we jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that we've got a sustained sell-off really from the key level that was broken around that 65 cent mark. You can see that we've broken down through the 64. It's trying to retrace now, but we've got a very big doji candle that's effectively finding support at this level around the 64 cent mark. It's a very big sell-off. Look, fair value for this has been considered around the 67 for quite some time. That's why we've had so much price action inside that big channel. But you can see now that we've had that breakdown from the 20 moving average all the way down. And on face value, you look at the that movement on the daily and you say, well, how would we even get in on that sort of trade if you weren't actually there when it actually broke? But you've only got to go through the smaller time frames. We know the key level was this marker here. And all we need to do is go back to the 1 hour chart. 1 hour is one of my favorite time frames for actually getting into trades. And you can see that when it did eventually break that level, obviously the daily did break through. It comes back and retests it more often than not. And that's a quality trade. That's the one you generally want to be trading because it's the one that gives you the opportunity to have the fourth broken through that support and then retesting it and giving you the role reversal that you're after. And of course, once that did happen, you can see here that it hit the support line from below. Okay. And then once it did that, it started the lightning bolt effect. So we had the series of lower highs and lower lows all the way down. So even if you didn't get that first initial touch, you could have got it here, you could have got it here, and again, you could have got it here. All of these gave you really good pip entry points. So as much as it looks very difficult to enter on a daily chart, when you look at it on a 1 hour time frame, which is generally what you'd be trading anyway, you can see it's very easy. It's the same thing that we talk about every single week. The pullbacks to the 20 moving average, or even the 50 here in this case here, they're very close together, so it really makes no difference. But when it comes up and touches the support from below, once it does eventually break through, that is the golden entry that you're always looking for. We'll move over to the US dollar CAD now. We'll go back to a daily chart. And you can see this is obviously having a very big run now. US dollar strength is running rampant. You can see that we've continued on, has not pulled back in effectively 3 weeks now. You can see we've got a massive move up. And it's difficult to actually see it stopping before it reaches the 136. I mean, I would expect at some point we're going to get a bit of a pullback, even if it is to the 20 moving average. That would be a quality entry point if it did that. But yeah, trying to get on board this one. If you're not already in it, it's a difficult one to get into. No question about that, because it's not far away from where we would consider resistance is. And it's Murphy's Law. The minute you would enter at this point here, that's when the pullback's going to happen. So if we then get a quality pullback to something around the 20 moving average or even the 134.50 level here, we can see all this support right through there. That would be a reasonable pullback as well. Then a small change of trend on a smaller time frame, and you'd be off and running on the CAD. But yeah, good trading on it if you're already along from the break initially, but very difficult to get into now. I think it's just a bit of a watch and see on this one. Let it pull back. If we see a series of lower highs and lower lows, you could trade it down to the 20 moving average, but that's a moving concern now. So I'd be a little bit reluctant to be doing that. I'd rather trade in the way of the momentum, because that's a very aggressive trend that you'd be wanting to trade against if you were trading it short. Over to the US dollar yen, and not much different here really. We've seen a little bit of weakness in the last daily candle, but yeah, aside from that, it broke through the resistance that we were talking about here at the 144.80. It got to as high as 146.30. So I mean, it had a decent run. It's pulling back a little bit now. If it comes back to around that 145, it could give us a quality entry to go long. That would be the ideal trade. I wouldn't be, trying to fight this one either. I think the dollar strength is too strong at the moment. So wouldn't really be looking for shorting opportunities just yet. If we get a series of lower highs and lower lows on a big serious time frame like the daily, maybe we look for a short down to the 20 moving average. But I would be reluctant to do that with the support level here, because we would expect that support is going to hold where that previous resistance was. So be very careful there. One of those ones, though, if you're going to get a pullback to the 145, If the 20 moving average is there at the same time, that is the a really, really good entry in terms of what you're looking for. But of course, you need a smaller time frame to play the game. So if we get a series of higher highs and higher lows on a 15-minute or 1 hour at that point, that would be an ideal trade, and the first target would be the 146.30, and a break of that level, then we're going to start pushing up to around that 150 mark. So it seems a little bit far at the moment, but it can certainly do it, especially with the other pairs selling off as hard as they are. It is a definite possibility. So I'd be looking for the pullback down to around this level, and then look for a quality entry up with a change of trend confirmation on a smaller time frame. All right, over to the dollar index, and at very heavy resistance now. It's done its job again, landed off the 20 moving and 50 moving averages here, pushed up, 20 and 50 moving average cross now, guaranteed cross. That's not going back anytime soon. So with that, we know that we've got very strong movement. We know also, though, that we've got resistance right here. We've got the this level right here was support for a long time. Then it was resistance. Then it was support again, and it was resistance again. So whether there's enough force in the market now to push this higher, the next real level for it is around that 104.30 area. But of course, the euro is the one we're going to be looking at, focusing on really. So we'll jump into that in a second. But really, it's at resistance now, and if you were taking profit on the long from this area here, this was the level that you would have taken it, because there is problems potential in front of it now. But let's have a look at the euro, because that's the one that we would probably be trading anyway. Absolute support line where it's landed, 108.50. We talked about it last week. We said that if it did sell off from up here, this is a likely target, and it has hit it now. So if you did take that trade and you shorted it, you'd be well and truly out of it by now, because it did hit the marker. Look, I would be reluctant to take this any shorter until it actually did pull back a little bit, mainly because there is a lot of support here. Okay, so you can see right through here, very, very strong support, and it was resistance at this point here, so it makes it a strong roll reversal. We are getting a 20-50 moving average cross now, nothing short of an extraordinary move up. Only a handful of candles would stop this from crossing now. So unless there's a very, very big turnaround in the market, this is going to cross. And realistically, any longs from this point onwards are a counter trend, but we have got a series of lower highs and lower lows on a daily, so we've definitely got that change of trend. So what we want to be looking for, if we are trading up to the 20, we want to see a series of higher highs and higher lows on a 1 hour or a 15-minute chart. And if it hits the moving average, then that would be the take profit target, because this is definitely in a downtrend, a prevailing downtrend on a daily. So if you are counter trending along, going along, you're only going to the 20 moving average probably at best. And if it gets there, I'd be looking for shorting opportunities at that point. I would not trade this one any longer than the moving average until the daily closes above that 20 moving average. That would be the condition of the long on this one. But very, very strong support where it is. So keep that in mind. And if it is going to test a moving average, this would be the area you would expect it to test it from. All right, and finally, we'll have a look at the S&P 500. Big sell-off day, big negative day in the US. You can see that we hit the 43.60, and this wasn't even the worst of them. The Nasdaq and the Russell 2000 actually fell more from a percentage standpoint. They were above 1% falling, so this one actually held up better than the other two. But that said, it's still pretty ordinary. And again, we've got the sequence of lightning bolts now. We've got a series of lower highs and lower lows on the daily, absolute confirmed downtrend. But perfect trading. I mean, technical 101 really, you can see, came down, touched the support zone that we would have expected it to do, went back up, touched the 20 moving average, and then sold off from there. So perfect trading. If you follow the rules that we always talk about every Friday, you should have been able to get into this trade and trade it quite successfully, because realistically, it would have already hit its profit target, because that would have been around this area here at around the 4,400 flat. But of course, if you're still in the short, which is perfectly okay as well, the 43 sort of 30 area is the level that I'd be really concentrating on as a level of potential support now, which may stop it. But again, nothing short of a very big reversal is going to stop the 20 and the 50 crossing over. Those moving averages are likely to cross in the next few candles. And really, it hasn't crossed since March 23, right? So it's been quite a few months since it crossed, and you can see the trend that we've had. But this is definitely changing. That trend has now been reversed. There's no question about that. The prevailing trend is now short. So consider all of these levels that were previous resistance to be support now, and the next common level will be the 43.20. If it gets itself back up above the 43.40 on a daily chart, by then it needs to be trading above the moving averages. I wouldn't be excited about trading this one long unless it gets above those 20 moving averages. Again, we know we're in a seasonally weak time of year. August, September is generally weak, and it could be playing out a little bit earlier than expected. But yeah, August is not really a strong month anyway, so there's no real surprises here. And there's not a lot of good news to expect to actually turn this market around. So we're just going to have to trade what we see, use price action as your guide, and respect all these levels because they're certainly playing out in a nice way. I hope everyone's had a great week's trading. I think we've had some really good opportunities. Hopefully you're able to take advantage of them. Look forward to seeing you next week, and keep your stop losses and take profits fairly tight over the next 24 hours. And then we'll see what the market gives us on Monday as to whether the levels have actually held up or reversed. Thanks, everyone.